if you look at manufacturing jobs, Joel Schulman, that's only a 6,000 expectation, which is low. Maybe it's a seasonal story.
Well, we're getting most of the job growth actually from tech companies. We're getting from companies like NVIDIA, Google, HubSpot, AppLovin. We've got to remember that of the 500 companies in the S&P, they actually went down last year by about 200,000 jobs, about 225 negative growth in the S&P 500. We had about 225,000 increase in 30 entrepreneurial companies. So this job growth is not evenly distributed. And we've got to remember that when we see the job growth numbers, we got to break out who's actually getting it. So it's primarily tech and some healthcare services. It's not in retail. We're seeing some, not retail, hospitality. So the job growth is not evenly distributed across sectors. It's not evenly distributed among companies.
And Joel Schulman, that's the question for the Fed. And we heard that from Jerome Powell when he was in Portugal, that they're going to start looking, not that they weren't looking at it before, but there might be more emphasis now on the employment picture.
Well, we've got to remember, you talked about how over a third of the jobs came from government. We've got to recognize, again, it's not evenly distributed. Now, these numbers are despite the fact that we have 4.3 million baby boomers eligible for retirement per year. So the fact that we've got more people looking for jobs, recognizing that we've got many people who are retiring per year, and this kind of goes to show in terms of how weak how the economy is actually weakening. In that we have many people, seeking employment and not necessarily finding, with numbers ticking up 4.1% from 4%, and they were as low as 3.4% just about a year ago. So the numbers are weakening. I think the market's rising today based on this anticipated cut in the Fed and the Fed interest rates. I don't think it's going to happen in September. We've got to recognize that with shelter going up 4.4% per month, that's about 5% per year. That's about a third of the index, of the CPI index. So that's about 1 to 1.2% of the overall annual inflation as it is. And the Fed wants to keep it below 2%. So with just shelter alone, we're already more than halfway there. So I don't see it happening in September. We don't have a meeting in October, and then we'll see what happens the day after the election. Maybe we get the first one there or right before Christmas.
Well, and I just also, want to point out as well, Joel Schulman, that even though we do have a market, well, we pulled back a little bit with the Dow, this is that inflection point for investors. We're beginning the third quarter, second half of the year. The first half was strong. I'm wondering if you are looking at history and saying we're going to get that September, October pullback, which wouldn't be a bad thing, and we do see that a lot of years with the markets. Are you expecting that this year, or is it because it's an election year, do you think that we will not see that?
Well, to your point, this is an election year, and we'll see what happens with the Fed rate cuts. And we're seeing, again, just this morning, based on this news, that the market's responding positively in anticipation of that. Now, one of the interesting things about this being an election year, we haven't focused on the economy for obvious reasons in terms of how that debate was handled. And that's the real story. What is the difference between the two parties and how they're going to handle the economy, which usually drives elections in terms of economic policy and how people feel. And we've got to remember that in this market, with the jobs moving the direction they are, with inflation moving the direction it is, and in terms of the outlook of what's happening, the government increasing their budgets and increasing their hiring, they're actually very quietly in many states increasing taxes. In fact, in the state of Massachusetts, they imposed a millionaire's tax. 4 other states did it. They raised $1.8 billion. So they've increased services, and then they're taxing some people to pay for it. And they have taxes around the country. There are about 30 states, I think it's 32 states, that now have they're talking about raising taxes quietly in different programs. In the state of Illinois, they did a gambling tax. It's up to 75%. California had a mansion tax. Other states have this. So they're quietly already imposing, particularly in the blue states, these additional taxes. They're going after either what they view as the ultra high net worth individuals, or they're going after certain industries like gambling. So that'll be very interesting to see how this rolls out.
Final word, Joel.
Yes, I couldn't agree more with him that I think we don't have enough here yet to cut the rates. We might see it the second half, and certainly more next year. All right. And hopefully we'll end the year on a good rally.
All right.